Hello, everyone. Welcome. What a great week that was. One of the most important dynamic in the market has completely flipped on itself, and therefore the market itself, the equity, fixed income, fiat alternatives, currencies, everything just essentially flipped on itself. And it was quite transparent and obvious when the QRA came out, and we shall talk about this. Let's start with rates. Let's get, and at the end, as always, we'll get to our positioning and the thing that the trades that we're taking coming on into this month, and probably by the end to the end of this year. Let's start with rates. Let's start with the long term and the short term, and the expectation of the Federal Reserve policy. This relief rally and this move in long term rates. It was very obvious when the QRA came out, and we'll get this relief rally and the significant move for lower because of they shifted issuance to the bills once again to the short end. This doesn't solve the underlying dynamic, doesn't solve the underlying problem and the fundamental issue that we have, with the debt and deficits. It just pushes it further into the future, onto the next quarter and the next quarter, and they keep borrowing 5.25%, and they have to roll it again. So, I guess that's why the Federal Reserve has been so dovish, and Powell was very dovish, and maybe they are really considering lowering rates because they have to lower rates. They pretend like they don't notice this move in the long end, but they clearly are concerned with it. And the Yellen gave the interview before the QRA. I don't remember the exact date, but she said the interviewee asked her if what's up with, what do you think is going on with the long end, and she said that was mainly because of the re-accelerating and strong U.S. economy, which is complete lie, and we and now we probably see and understand that they understand this problem with the long end, but they are trying to conceive it. Obviously, they're not trying to show any worries, and the Federal Reserve knows this. And the main job of the Federal Reserve is not the full employment. It's not the inflation targeting and stable inflation. It is. It's to make the Treasury look solvent, and they are failing on this mandate. Their main goal, because they have jacked rates so high, and they have to do something with those rates. But this move in the long end has been quite plainly obvious, and this probably will continue for the next month, for the foreseeable future. This relief rally, it's not the change in underlying tail dynamic. It's not the solution to the problem. It's just we're seeing this retracement, and it's gonna probably consolidate for a little bit more and more. It's gonna come down lower, and it's gonna come back up higher. The underlying situation has not been resolved, and this move that we've been observing, it's not the beginning of what people expect of a continuation lower and the run up in TLT higher. It's going to be more akin to this thing. Another consolidation, but this is good. This is good for stocks. This is okay for stocks. That's why the stocks has been rallying and probably will continue to do quite well coming into the by the end of this year at least. So this is the long end, and because we have this relief rally in the long end, we've received the relief rally in stocks. There are plenty of opportunities to play stocks right now on the long side. Credit has jumped incredibly back on the back of this move. Everything is very nice, honestly. Everything is very good, and we're probably going to see the continuation of this move. Not the incredible fall in long-term rates, but a stable consolidation of some sort before the next event rolls in, and we shall see what that will be in the future. But for this month and probably the next month, everything is fine in taking on risk. It's not bad, actually. It's a very good environment for us. And as to short end, with the dovish press conference from Powell, which we didn't expect at all, Let's lay this out first of all. Inflation is reaccelerating. We're seeing a broad-based reacceleration in inflation, and at the same time, market is pricing in not only pause, but the more and more cuts coming into the next 6 months to a year. On the back of what so far? If we expect rates to come down, if we expect soft landing, if we expect Federal Reserve to start cutting rates, how the hell is inflation going to come back down to 2%? It is re-accelerating and it's going to stabilize at these levels. Why is the market? Why? Honestly, market can price in whatever it wants. What the Powell is going to do is the completely other thing. And the way he showed the weakness in his resolve in the last press conference will surprise us quite a bit. But once again, this dynamic that they know they have to get rates down one way or another because they're failing on their main mandate of keeping the Treasury look solvent. Maybe they're gonna just completely abandon the inflation fight at this point. This is gonna be very, very interesting if they do this. So therefore, we have to reprice the inflation expectation higher. Something has to go. There has to be a release valve. The market either has to. We cannot have soft landing and inflation coming down. We either having hard landing and inflation coming down, but we're not priced for hard landing right now, and we're not priced for inflation remaining at these levels. So it's either hard landing or inflation stabilizing here. And we most likely, with this relief rally in stocks and in bonds, this process of hard landing, process of deteriorating economy and demand destruction caused by the rates, we are getting relief rally in rates. It's just we pushing this forward in time once again, maybe 2, 3, 4 months in the future. So there is no hard landing in the economy. Therefore, inflation is not coming down anytime soon. Market has to reprice inflation expectation higher, and that in turn has to impact positively the term premium and negatively the bond yields. So that's why the bond yields are probably not gonna completely crater right here on the back of the issuance, less issuance at the long end. So that's why we're calling for consolidation at the long end and repricing of inflation expectations higher. But we have to get the next CPI print, and we have to get the idea of what's going on that front, how the market reacts to another reacceleration higher while the Federal Reserve just abandoning their inflation fight, I guess. There has to be some sort of reconciliation in this manner. And we've seen what happens when they show weakness and inflation reaccelerates. We are getting these vibes of long-term rates going slightly higher, gold going higher with long-term rates, dollar falling, and everything else is rising as well. So this is quite interesting. We are prepared for this. We're having the next inflation print is going to be on after the next week on 14th of November, if I'm not mistaken. It's Wednesday or Thursday. So gotta wait and see how the market reacts. But before that, it's complete smooth and clear sailing. So this is the idea. This is the situation with the long end. Beautiful, absolutely beautiful for our positioning in stocks and some of the selected names. And as to the short end, this is the thing that we cannot reconcile as of now. The break in trend, we effectively broke in trend on the short end, and this is a very important signal. It's either peak in rates right here, right now, and we never seen two-year come back up right here, back to the previous cyclical high. But I cannot see how that's possible with this inflation. Have they given up completely? If that's correct, then sure. So what we're thinking now, we cannot blindly ignore this signal. It's impossible to ignore. How are we playing this? We have a very big allocation to gold right now, because if you think they're going to lower rates, gold is going to pop incredibly hard, incredibly big. It's going to be a nice move in gold, and if we're going to get another massive issuance, gold is going to go up even higher, with the long-term rates going higher. So gold right here is a very good asset to hold for the next 1 to 3 years, until we get resolution with rates. So we structured a couple of nice collars on gold, going forward due to the June 21st, and we're just gonna hold it, and we have 110% allocation. We went really big on gold, 110% allocation. So we completely hedged for recession. If you expect recession and if you expect hard landing, gold is going to do incredibly well. If you don't expect hard landing and you expect inflation to stabilize right here and they to give up on the inflation fight, gold is going to do quite well right here. Once again, the worst case scenario for gold is if they start hiking again, which they're not going to do. So gold is an incredible asset to hold, a diversifying asset. It may not do anything for the next year. It may stay below 2050, 2100, below the previous all-time highs for the next year. Very well, might be. But at the end of the day, we will get the resolution, and we will get some sort of the recession of some sort, and gold will do the job just fine, just beautifully. So that's why we have quite a big allocation to gold currently. And as the short term rates, we think of putting on the TUA play, honestly. Not now. We will see and wait for the next inflation print, and on the next inflation print, if we are correct that inflation is most likely going to show resilience and maybe slight reacceleration, we're going to put the long, and we will see this retracement in the short-term rates. We're going to put the long. We're going to buy the TUA, and that's what we're going to do. Okay, this is the main dynamics we want to discuss as it relates to the rates. Now onto the dollar, and because we've received such a massive move in the short end of the curve, we broke the trend, and the dollar is highly correlated not to the long bond but to the short end of the curve. Dollar broke the trend as well. So this is massive. This is very significant. Dollar is firmly into the bearish trend territory, as well as the short end, and this is how you have to play this. This is what the signal is showing us. One thing, once again, that the signal cannot show us is the magnitude of the potential trend. The trend on the dollar has shifted, and it is negative now. But the magnitude of this trend is unknown to anybody. We do not know whether this is going to happen or whether we're just going to stay in consolidation with a downward sloping, consolidation. And I'd say there is, with the inflation where it is, dollar is not going to go anywhere. It's not the beginning of this massive move lower in the dollar as people might expect. It's definitely not the massive repricing and devaluation of the dollar. Not now. It will come, but not now. So dollar is bullish tail, bearish trend, and bearish trade. So on a tail basis over the next 2 to 6 months, we would expect some sort of a reprieve and consolidation in that area, and that's it. Essentially, the moves in currencies will get less and less impressive. The volatility will fall. It has already fallen, but it will fall even more, and we'll see some compression just because we're not going to get a massive shift in unemployment data or massive shift in inflation data in order to shift the market's expectation of the Federal Reserve policy significantly or ECB policy significantly. So nothing to do here, honestly. But it is quite clear that the dollar is very strong. That you have to play this therefore in that manner. And what is negatively correlated on the rolling 120, 150, 90-day basis to the dollar is gold and stocks. So these are the great places to be. So this is as to the dollar. We are not short this. We are not long the euro. We try to get long of the dollar. We took a very small loss right here when we recognized that the trend has shifted meaningfully, and that's it. Do not put on the dollar longs right now. That's what I have to say. This is positive for BTC, obviously. What can I say? What can we say in regards to Bitcoin? I have nothing to add, honestly. We've entered, you know how we manage our Bitcoin allocation. We have a trend following signal, and 2 weeks ago we just on the close of this week we entered into the long position right here, and now we are up. What is it? Around 17%. This should reload. Around 17%. There's a problem with it. We have to fix this one. Around 17% on this position. Quite happy with it. In regards to Bitcoin, we've been calling for it for a long time. There's a massive shift in sentiment in the structure, and we do believe that Bitcoin is going to do quite well coming into the 24. Regardless of what the Federal Reserve is going to do. It reminds me of the situation that we found ourselves in that period. Once again, in that period, we've been expecting Bitcoin to do quite well because of the halving, yes, and in 2020, we did expect Bitcoin to do quite well coming into the 2021. It's just a matter of volatility. What's going to happen before the cyclical move is going to come in. What we didn't expect, obviously, nobody expected this, is this move that is connected to the pandemic. We've been long Bitcoin big time in this region. We've been accumulating position, and we were expecting something like this to unfold, but without this move because it was unforeseeable and a continuation higher. This, I might say, we do expect something like this, some sort of consolidation right here before another continuation higher. And whether we're going to get this move or not, we're probably not going to get this move, not on this magnitude. We expected the move in rates to cause this situation. The only thing that might happen is either nuclear war, a significant beginning of a new war between maybe America and China, or a significant and massive spike in rates. This is the only thing that can cause something like this to happen again in all assets. And we wrote it was right here on this week. We wrote a post on site that there is a great worry in regards to the TLT behavior and the behavior of a long bond in the US. Are we going to get a massive spike as we got in the gilts crisis in 2021? If there is something like this on the cards, that we're going to get a massive spike lower in everything, completely everything. That's why we exited the position, and essentially we broke the trends and we exited the position, and we just underlined our worries in terms of what's the worst case scenario. It didn't happen. We know what's happening, what is currently happening with the TLT and with rates, and next 1 to 3 months, everything's going to be fine with the long bond. Unless something happens with inflation, but we're not seeing anything happen there. That's why Bitcoin is going to do quite well. Honestly, I would expect that somewhere in that region just before we're going to stay somewhere in that region just before the next cyclical move. I don't know what magnitude it will be, obviously, but we are in the market currently. We're quite happy with it, and we are going to be. We would be expecting something like this to happen by the end of the 2024, by the end of December, and we would expect Bitcoin to revisit 60,000, maybe 100,000, if all else equal, if the history confirms this. But once again, these are just my opinions, has nothing to do with the underlying reality. We use the trend following model. This is the best thing we've created. And for allocating to Bitcoin, we use just only that. That's it. And we just don't need to ask ourselves questions of what we're going to do or what we think. It's just a systematic process. And we are in the market currently. And we're just waiting for the next signal to come in. That's it. We are quite confident, once again, I had to add this, when the time comes for some sort of the move like this, we will be there in the market and we will capture most of it. This is all we want. This is the main goal. Ethereum is showing good signs as well. Once again, every single cycle, Bitcoin, just before the cycle begins, before the big move, Bitcoin dominance spikes, and when the move actually unfolds, then Ethereum and altcoins slowly picking up the steam and chasing the Bitcoin higher. And this is what the Ethereum has been doing previous cycles, and this is what it's doing currently. We see a current underperformance of of Ethereum to Bitcoin, and Bitcoin dominance spikes. But Ethereum is squarely in the bullish tail and bullish trade and trend territory, and I think that it would be reasonable to not expect Ethereum to perform as well as Bitcoin into the next 3 to 5 months, but by the end of 2024, I would expect Ethereum to get back maybe to previous cycle highs, so previous all-time highs. It's a good buy. I think if Ethereum is indeed a good buy. I don't know if anything has changed with the underlying asset, but it is a good buy. It makes total sense to put 10-20% allocation to Ethereum this time around, and your stop loss and point of invalidation right here is a tail support, and I don't see Ethereum ever breaking tail support right here, unless we're getting, once again, some sort of a massive spike of volatility in all asset classes and some sort of repeat in 2022, and we might revisit this low, this low, and we might even go much lower. But this will be at the end of the day, this will be just another buying opportunity. This is the contention. This is the idea with Ethereum. Long Ethereum. We are long Ethereum from here, and this is the position in crypto. In terms of the currencies, obviously, Euro shifted dramatically into the bullish trend. We've outlined the expectation going out in 1 to 3 months. Even JPY strengthened on the back of this move from the dollar. Obviously, it's going to strengthen. JPY is going to remain the weakest currency, but this problem regarding the worries about the long end and the continuation of the dollar strength has subsided meaningfully, and we don't see this re-emerging in the next 1 to 3 months. So it's some sort of a risk-on scenario. That's why we closed all of our shorts on JPY and all of our shorts on CNH. As soon as the QRA came out, we just closed, and we've heard how the Powell behaved himself. We closed all of our shorts and all of the currencies against the dollar. One thing that we are considering, a very interesting thing, is potential carry trades. Putting the carry trades for the next 1 to 3 months, maybe, and manage it dynamically. Obviously, Mexican peso to the JPY. Once again, volatility spikes. So volatility comes down. VIX is falling. We're getting some sort of the risk-on scenario, and Mexico currency and Mexican stock market has been on a tear recently, and if we expect continuation of this dynamic, this is a very great asset to buy. We're just waiting for a better opportunity. Mexico and Mexican stocks as well. So this is the currency. Let's talk oil for a second. Oil is there's CL. It's not going to go anywhere. Honestly, we do not expect anything to happen with oil. It's once again, it's bullish tail, and we would expect some sort of a consolidation, fall in volatility, and some sort of a consolidation in 75-83 region over the next 1 to 2 months. That's it. Nothing to do in oil, honestly. Maybe selling volatility, interesting. Maybe just selling strangles, naked strangles. We are observing this possibility, but that's it. I mean, this is the positioning in oil. When it's going to get to the long end of the range to 77, 75, we will sell puts on XOP. We will sell puts on XOP or IH, and this is how we think of playing it. Plain and simple. Maybe strangles on oil. We do not expect oil. There's nothing to do in oil from the CTA perspective, from the trend following perspective. Um, UUN, uranium. Finally, some sort of relative weakness and consolidation in uranium. We've been holding our longs from this point. Our average has been $16 in and around that region. We've closed 50% of our position, and we're just waiting. We're just waiting and waiting. If we're gonna get back down to 22, 21, we're gonna reload in the position even more. That's it. Still long of uranium. Nothing has changed here. Nothing has changed here. Same thing with CCJ. We actually opened a very nice. We sold quite puts. I mean, religiously selling puts on CCJ has been very good trade over the previous 6 months, and what we've been doing this, and we sold very nice strangle on CCJ in that region. Going into the earnings as well, holding long on CCJ, CEG, the beautiful thing as well, holding long on CEG. And that's it. These are the two exposures that we have related to the uranium. Next is GLD. Taking into the account what we've talked about, what we think is going to happen with the dollar and with the long end. Nothing's going to happen with the gold. Gold is going to remain, if right here we've been calling for a downward sloping consolidation in that region, and it's actually transpired downward sloping consolidation and then a significant move lower on the back of a repricing high in rates. Right now we would expect for an upward sloping consolidation, and this will continue and continue and continue. That's why we're holding very sizable longs on gold, and at the same time we sold strangle 3 days ago. We sold strangles as well, 190 and 180 strangle on gold. We sold it just to play the short volatility play, we just wanted to short volatility, and this is what we do. And we're probably going to be selling strangles on gold for the foreseeable future. That's it. There's nothing, complete nothingness is going to with gold and in gold, but a good place to be. Good place to very good diversifying asset. Okay, rates, and let's talk about the SPY. Let's talk about the MES better. Let's look at the SPX. Oh, so what we expect to happen with stocks. Obviously, yes, we're gonna see 4,400 in SPX in the foreseeable future, and we would expect some sort of the continuation. Honestly, we have to wait for it to break the trend in order to say that yes, we did establish the bullish trend momentum, and there's a good chance that we're gonna see a revisit of the previous cyclical high in SPX and SPY. We haven't yet done it, but the momentum is clearly, and the underlying dynamics which are lasting, and once again we'd expect a very nice risk on environment in the next 1 to 2 months by the end of this year. So any single dip that we're gonna get right here, we're still bearish trends, but we've broken the trades, and we've taken out the previous last liquidity. Last liquidity is a concept that we've developed, and we've been looking at this low, and we've been calling for 4150 on SPX, not on SPX, but on the futures mostly, and it did transpire. We did came out and taken out the last liquidity, and after that we usually have a very nice reversal in price if we want to continue higher, and this is what we're getting currently. So in regards to SPX, we are put on a lot of longs, and we would expect some sort of reaction from the trend resistance. And if we're gonna get into this and reject, we're still gonna be buying SPX. Anything below 43.40, 42.90, right here in that region, any retracement, we are the buyers of it essentially. That's it. This is what we expect. We expect some sort of consolidation, continuation higher in SPX, and if we expect, and we want to buy any dip. Therefore, let's get into the names that we actually going to be buying dips in. Microsoft, the biggest, the strongest name that exists on this planet Earth currently is Microsoft. Now, there are plenty of small names, but from the big boys, Microsoft is an absolute monster. We would expect Microsoft to reach the previous cycle highs. What we did on a lot of these names, we went to the November 17th expiry, and we bought a couple of strikes up, call verticals we put on. 1 to 3, 1 to 4 risk reward, and this is what we're gonna do. We're just gonna hold them. If we're gonna see a retracement that we've talking about, we're gonna see even a big retracement, sort of a big retracement in SPX and Microsoft and all of the names that we put in these longs in. And what we're gonna do is we're gonna either roll those verticals, or we're just gonna close the short leg and add to the long position. That's it. Just as plain as it sounds. This is how we're gonna play this. We did so in Microsoft. We did so in Netflix. We did so in AMD. We did so in Nvidia as well. One thing with Nvidia is incredibly, I mean, it's just incredibly funny. I've seen so many people pointing this thing out, putting this brilliant head and shoulders, and when it is so obvious, it never happens as usual, per usual. So Nvidia is bullish trend and bullish trade, and we would expect Nvidia to reach 475, 480 in the foreseeable future, in the next month, let's say, next 2 months. And same thing with this, November 17th, vertical calls, 1 to 3, 1 to 4 ratio on Nvidia. That's it. This is essentially, I think, this is a very good spot on SPX overall. Generally, if you think of getting allocation to stocks, just buy the things that you like. We've been with Citrini. He's been doing thematic investing and just creating these brilliant baskets. It's written on my wall like that. AI winners, and AI long short, AI losers, GLP-1s, long short, fiscal beneficiaries. We actually put on everything. We have on all of those baskets, and just hedging with gold, hedging with rates, and we will see how we're going to play the oil situation when it comes. But it's a good place to be. We are in a good position, honestly. And that's it. Yeah. Insurance. Yeah, we did not put the insurance book on. Yeah, AMD, Nvidia, all of these names are going to do quite well. Oh, we have earnings just coming out before November. These are the main names that we think of playing. We also looking at Amazon. Absolutely adamant that Amazon is going to reach the previous cyclical highs as well, right here. With Amazon and with Meta, we didn't want to rush it. We opened the long positions, trading long positions on Microsoft and all the names that we mentioned. With Amazon and with Meta, we are waiting. We're probably going to do the same thing in Amazon. We're just going to wait for it to retrace. If it's not going to retrace, it's going to go higher. Okay, brilliant. If it's going to retrace and fall, brilliant as well. We're going to just get into the position. And with Meta, what we're thinking of doing is this guy is it was brilliant, honestly. Just the testimony of how effective it is to watch the flow and essentially don't listen to your opinions, and because we've been long Meta since that point, because the flow has been decisively positive right here. But when we broke the taken out the trend support right here and broke the trades, even though the earnings came in incredibly well, it was good earnings. It was very good earnings. But what we did in those earnings, and we've been observing this over the previous week, that even though the earnings on the different names came in very nice, the names dropped anyway. The tickets dropped anyway because of the negative flow dynamic. And what we did right here, and this is the only thing that it, if you were bullish Meta, this is the only thing it could have went. We've taken out the previous trend support, and we had to have some resolution with the previous tail support right here. And we did this. We've came, we've taken out the previous tail resistance and at the same time trend support, and we establish a positive trend and trade dynamic, effectively creating this as another tail high-low. And if the dynamic with SPX persists, and we're correct in our understanding that it is relatively smooth sailing over the next 1 to 2 months, even 1 month is enough, Meta is going to go back to 330, 340, 350 right here. Very reasonable to expect this. So what we've been putting on Meta is December 15, 330, 340 collar. And the risk right here, yeah, it takes much more margin, we get this, but you can get 1 to 9 essentially right here. So this is very nice. I mean, very promising, very nice. And 330, 340 is it's not that egregious, to be honest. This is 330 is the previous trend resistance, and 340 is just 2% above this. So this is how we're playing this currently, and I guess we're gonna end on this high note. And any new trades that we're going to be taking, we're going to be posting it on Twitter or in Telegram channel anyway. So thank you for listening. Very promising. Next month is going to be very, very promising, I guess, from the risk on perspective. Cheers.